Mortgage rates have been on a slow but steady decline for the past 4 weeks. With many anticipating a potential drop in Fed funds rates this month, people are wondering if mortgage rates will fall further in the days ahead. Welcome to Dre's Take. This week we see mortgage rates hovering around 6.6% or so, with a point or two paid up front. A month ago, that average was about 6.87%. Since Fed Chair Jerome Powell spoke at the annual symposium in Jackson Hole, Wyoming, there's been broad speculation that the Fed's getting ready to reduce their benchmark interest rate here in September. This has been predominantly speculated based on the remarks regarding the jobs report, which is showing signs of trouble. With the Fed's primary objectives being to tame inflation while maximizing employment, it's believed the Fed will cut its benchmark rate to encourage more hiring before the jobs report takes a deeper dive. This news has some sideline buyers on pins and needles wondering if mortgage rates will fall as well. However, that's not quite how all this works. The Fed funds interest rate primarily impacts short-term borrowing. Think credit cards or short-term loans, car loans even. Whereas longer-term borrowing like mortgages take their cues from the broader market and in particular the bond market. These markets tend to be forward-looking. And the speculation since around July has been there's about a 90-some% probability that the Fed would lower their benchmark interest rates here in September. Subsequently, those potential drops were being priced into mortgage rates this whole time. And so it's no surprise that since the end of July through today, we've seen mortgage rates trickle down, you guessed it, 0.25%, which is the same amount that the Fed is expected to reduce its benchmark interest rate. What does this mean? Well, it means that mortgage rates are already sort of priced to absorb any potential Fed funds rate cut this month. And it's unlikely that we'll see any substantial drop in mortgage rates when this Fed funds rate cut actually takes effect. However, if the language coming out of the Fed in, let's say, October, November or so signals towards future rate cuts, then we could see a repeat of this cycle. So I wouldn't get my hopes up about mortgage rates crashing in the next 30 to 60 days or so. They're likely to stay stable until we get more direction from the Fed, say October-ish, as to whether or not we'll see another rate cut to kick off the new year. In the meantime, if I can help you buy, sell, or invest, feel free to reach out. I'm always happy to help. And until next week, that's Dre's Take. All right, y'all. Take care.